Today, we are putting the focus on PNB Housing. Stock has been on a rise today after a positive note from Goldman Sachs as well. Let me go across to Hersh, who's breaking it down. Hersh, what's the bull case and what's the bear case for PNB Housing?
Well, plenty of zing on the stock today and an upgrade coming through. But yes, I'll try to kind of outline the bear case along with everything that's coming, which is largely bullish, at least on a day like this. First off, with regard to growth guidance, they're guiding for a 17 to 18% retail loan growth on the book. But what we've seen is that the last 5 years, the growth has been absolutely sluggish. And therefore, there will have to be a big reversal in loan growth if this were to start to come through. The bull case is, of course, that retail loan growth will be 17 to 18%. Now, in terms of where that growth will come from, one of the spaces is affordable housing, and that's my second case. Affordable housing, in that sense, is going to be one big component of the book. Currently at around 5,000 crore on a 70,000 crore book size, is expected to grow fairly rapidly. But mind you, the book size of 72,000 crore in the larger scheme of things is quite large for a housing financier. We've seen other housing financiers growing at a far sharper clip. So in terms of compete, can they be able to grow on a 72,000 crore size only with the help of affordable housing? I'm not so sure. There are a couple of other levers which they will have to use to kind of ensure that that loan growth comes through. And there are other players in the market which are growing faster because the size is larger here. Let's talk about asset quality because that has been the big overhang. They're expecting credit costs at 30 to 35 bips, largely driven by recoveries is what they've said. That's the bull case. Asset quality in the affordable housing book as well as new businesses that they're doing, including retail, needs to be monitored more closely because these are new ventures that the company has gone into. Whether they can continue that kind of a credit cost on the new book is really the big question, which will probably translate in a year or two as the cycle turns. Margins, they are expected to continue to improve since they're going into newer segments. Spoke about it. ROA target 2%. They're doing 2.2 roughly at this point. But margins, at least, they're banking on a turnaround in the business as a whole. And therefore, if they're able to turn around the business, then those margins are sustainable. So something you may want to really look for is whether it's sustaining or not. Valuations, cheaper than peers, currently at roughly 1.5 times 1 year forward. Or even sub 1.5 times 1 year forward, to be absolutely precise. But the real question on the bear side is growth and asset quality. They've seen difficulty in the past, and hence it's cheaper than peers. Also, the growth is slower than peers, and therefore something to be mindful about. It's a bit of a balance that you'll have to try and calibrate in terms of valuations. Growth plus good asset quality plus valuations, all three is the right way to look at it. And that's where this company has suffered, at least over the last few years.
Okay, interesting breakdown there as far as PNB Housing is concerned. Earlier in this year was on a lot of, let's see favorites for 2025 list. I wonder if it still makes the list for you, Avinash Gorakshikar. Any views on PNB Housing after that very elaborate breakup that Hersh has given us?
No, I think clearly, valuations seem to be attractive, Tamanna, but, as Hersh rightly pointed out, the track record in the last 3 to 4 years has been very sluggish. I think, the market would obviously look at re-rating the stock once we get a little bit of stronger growth, from the April to June quarter. Hopefully, if interest rates are cut and I think the affordable business segment grows significantly for the company, then I think one could definitely look at the stock. I think within the housing finance space, there's a lot of competition. We believe that it's better to wait for a quarter or two to see what kind of growth trajectory the company actually records, because the narrative seems to be very good, but I think deliverables have to be delivered in terms of numbers. So I would prefer a hold, fresh buying only after the Q1 numbers, according to me.